Dzień dobry, Artur Wiśniewski, stockbroker.pl. Witam Was wszystkich serdecznie na dzisiejszym live. Jest piątek, godzina 11, więc pasywną rewolucję czas zacząć. Dzisiaj z gościem. Naszym gościem będzie Jan Altmann z portalu o ETF-ach, z największego portalu dostarczającego analizy ETF w Europie. Mam nadzieję, że nas zrozumiecie, ponieważ będziemy rozmawiać w języku angielskim. Postaram się używać prostych słów, także zaczynajmy. Hello Jan, how are you?
Hello, Arthur. I'm fine, thank you.
That's great. Please, could you tell me a few words about yourself and about Just ETF, where you are senior analyst? As far as I know, you started your professional career in Deutsche Börse, which is the exchange in Germany, and you developed ETFs in this exchange. Can you tell me a few words about it?
Yes, sure. So I have been with Just ETF for 2 years now, and my job title is called Senior ETF Analyst. So I'm managing the ETF model portfolios for Just ETF, doing a lot of research and content on the website, and also perform a lot of webinars in German, unfortunately. And also, sorry that I'm only able to speak English. My Polish is not fluent. And in the year 2000, that is already 20 years ago, I have launched the ETF market at Deutsche Börse. I was working for Deutsche Börse at that time, and that was my project. And it was the first kind of this kind in Europe. So it started with 2 very boring ETFs on European indices in a time when you remember that was when the tech bubble burst. So everybody was watching tech stocks. And we started 2 very boring ETFs, but it picked up quite quickly. And the following year, in 2001, already new issuers came, and other exchanges also started their platforms. And so since then, we have seen a very fast increase in assets under management and number of products in the ETF market until today. And in the recent, let's say, 5 to 7 years, ETF also have gotten much more popular among retail investors. And we are watching this closely at Just ETF. Just ETF is an internet portal for selecting ETFs and managing ETF portfolios, mainly for retail investors. We are based in southern part of Germany, but our website is also available in Italian language and English language. It's managed and owned by the founders, and Just ETF is on the market since 10 years now. So you could call it quite established, but it's not the fintech type you might expect when you see the website first.
You said you started 20 years ago with just 2 ETFs. From that time, a lot of things changed. For example, now there are 1,500 ETFs listed on Deutsche Börse. In Poland, it's just the same history, but we are just in the very beginning. We have 7 ETFs, and this is just the start of passive revolution, which we hope develops in Poland. But at the moment, it's really something new. It's still new, and not many people know what ETF is. Could you just say a few words in 1 or 2 sentences? What is an ETF, and what idea stands behind investing in this instrument?
So an ETF is the abbreviation for exchange traded fund. So it's a mutual fund traded on a stock exchange. And for that purpose, it needs to have the legal format of a fund under the EU legislation. So that is quite a safe investment vehicle. And on the other hand, it is exchange traded, and that implies a bit more in the background than you might expect from an equity, because it has a variable capital. So the number of ETF units is variable, and you need a lot of market makers on exchange to guarantee that the ETF matches the performance of the underlying index. And now I've told you the word index. So most ETFs track a passive index, and that is the main thing behind ETFs. In these, it's passive investing. The philosophy of passive investing is standing behind ETFs, and you can easily trade 1,600 shares in the MSCI World in just one ETF trade at very low bid and ask spreads. So that's standing behind ETFs, and you also have a lot of asset classes now. It has developed in the past 20 years. It started with equities. Most ETFs offered on European exchanges are equity ETFs, but you have a lot of other asset classes right now. So you can invest into an ETF just to track the market. And what we recommend is to invest in the long term, because equity markets, for instance, are very volatile, and you can mitigate the risk of equity markets by a long holding period in a buy and hold strategy approach.
You said that these are instruments similar to mutual funds, but they are listed on exchanges, and they are recommended to invest in the long term, because in the long term, their advantages are most visible because they are cheap. But which asset class? So we use them to build portfolio. Which asset classes should we have in the portfolio? Let's start with this basic question.
Yes, we can first consider what is possible with ETFs, and I've prepared a chart for you here on the website. This is our live website, and you can see various asset classes here. And what can you track? You can track, of course, equities, and I've simulated that by selecting the oldest ETF I could find on the MSCI World. And this chart you see here is for the past 14 years, and you can draw some conclusions from that. For instance, you had a stock market performance of 149%. You've just seen it in a small tooltip here in developed equity markets. And the MSCI World, it tracks about 1,600 securities, covers 85% of market capitalization of 23 developed stock markets, just in one trade. And this is really also the performance of the ETF in euro in this case. We don't have it in zloty, I'm sorry for that, but I think the euro is a good proxy for that. And then let's take a look at emerging markets. This is one emerging market ETF here in the simulation, and you see the performance of more than 100% in the past 14 years. For 26 emerging markets, thousands of stocks in one ETF, which is, by the way, quite cheap. It just costs 18 basis points. Just as you mentioned, this is a big argument for a big advantage of ETFs. ETFs are really, really cheap funds, and there are no hidden commissions in that. And this is a big difference to mutual funds. Also, the MSCI World ETF, you can buy MSCI World ETFs at annual costs of just 14 basis points. This is 0.14%. Extremely cheap. The mutual funds of that, comparable mutual funds usually cost about 2% per year. Then you have other asset classes you can track. For instance, real estate ETFs, and they track mainly companies active in the real estate market or real estate trusts, exchange listed, closed-end professional real estate funds, also available on exchange, traded like an ETF. But you have other asset classes you can build your portfolio with, which are, for instance, these are marked in blue here, are bonds. This is a short-term bond tracker, and you can see very well the price has increased until this year, and then the central banks have lowered the interest rates. So the development in the future might be negative, but it provides a lot of security and safety for your portfolio, and can make your portfolio more robust against changes in the equity markets. Or you could also track corporate bonds or government bonds of any kind. You can imagine there are more than 600 bond ETFs available on the German stock market alone, or in whole Europe, it's even more. So bonds can be tracked as well and also added to a portfolio. What is this chart showing us here? This is for commodity baskets, also available as ETFs. So you have more than one commodity in an ETF, in a mutual fund traded on exchange, but performance has been a bit disappointing, as you can see here. This can have to do with bad performance of commodities in general, but maybe also about, could be also a reason that these products are working with derivatives. You can't buy the commodities directly at stock prices. You only can buy derivative contracts. And that might also be a reason of this really bad performance. I mean, it's a good diversification of your portfolio, but it doesn't provide value. And what is this chart here showing? This line is for gold. Gold has provided an exceptional performance, but just since last autumn, or autumn of last year, 2019, and it's the most profitable asset class in this chart. But for gold, you never know what the price will be tomorrow. For equities, you can conclude these returns will stay the same over many years. For gold, you have no clue. Gold doesn't distribute anything. It's just a precious metal, and increasing in price when investors feel unsafe about future market developments. And you can also see this in this very nice chart here. This chart is showing average performance per year, listed here in this axis, and average performance, annualized performance, annualized volatility, I'm sorry. So it's showing how much performance did you get for an existing risk. And the red bubbles show equities. So this is the MSCI World return. It has provided a return of 6.7% in the past 15 years of this chart, with a risk of about 18 or 17.5%. And when you can mitigate this risk by long-term holding, then you're well off with 6.7% of long-term return. This is the average return, not the absolute return for these 14 years. Same with emerging markets. They are more volatile, no surprise. It happens much more there. Return has been a bit more disappointing. This is due to the tech hype, and big tech companies are now part of the MSCI World, and all this fantasy is built into this MSCI World Index right now. You don't know what will happen to it in the future. So emerging markets seem to be a good diversification. These are REIT ETFs, and you might wonder why they haven't provided that much return. Well, it's just statistics. They have provided 4% each year, but at an even higher risk. So volatility for real estate ETFs is even higher than for equity ETFs. Then you have gold, but you don't know what will happen in the future. You have commodities. These are commodity basket ETFs, and these are bond ETFs. So they have provided returns that might be surprising to you when we're talking about negative returns in some markets in the big developed countries. But they have provided significant returns in the past years, and so did government bonds and corporate bonds, and of course also short-term bonds. So these are asset classes you should consider maybe. So international equity, not only on your local market. Now, your local market is too small for diversification. And I'm not saying that because the stock market in Poland is small, but this is also the case for the German market. It doesn't make sense to have German equities from a standpoint of a German investor as well. So you need to invest internationally, distribute your investments globally, and you can easily do this by choosing, for instance, an MSCI World ETF and adding an emerging market ETFs to that. Then you will have 49 stock markets in your portfolio with just 2 trades. And if this risk is too big for you and you don't want to hold ETFs that long, you can mix it with bond ETFs, which obviously also provide some returns. Maybe not that much in the future, but it can add your portfolio very nicely and lower volatility in the whole portfolio. Now, what is not listed here yet, because it's still too new, is crypto. There are even ETF-like instruments called ETCs. They are not really backed by a fund, just as the gold products as well. They are backed by a private contract construction, but traded like ETFs, and you can track even the crypto market. It's not listed here because we don't have a 14-year history for exchange-traded crypto products. So they are on the market since about 1 or 2 years now. Started in Scandinavia and Switzerland, and the first product was listed on Xetra, the platform of Deutsche Börse, about a few months ago. So this is an overview about asset classes you can track with ETFs.
Okay, so you said we have different asset classes. We have bonds, we have stocks, we have commodities like gold. So actually, depending on how much risk I want to take, I should have more bonds or more stocks. It depends on my personal individual preference. So let's say I decide how much bonds, stocks, and other asset classes I want to have in my portfolio. How many ETFs should we have in the portfolio? One ETF for bonds, one ETF for stocks, one for gold, or maybe there's maybe different rules should be better. How many ETFs should we have in a portfolio?
Oh, this depends very much on your personal situation. So if we say, well, I want to invest for a very long term, maybe in a savings plan, if this is available in your market, you can say, okay, I'm investing in equities only. And you can even start this with just one ETF. So it's fine to have just one ETF because it is already a diversified portfolio. Yeah, let's prefer the ETFs based on MSCI indices because they track 85% of global market capitalization. And the MSCI World, for instance, it contains already 1,600 constituents weighted by market capitalization. But on the other hand, you have a disadvantage because the US makes up 66% of the MSCI World market capitalization right now. So you have a large US bias in your investments then. If you say, okay, I also want to diversify more in other markets like Asia, you can add an emerging market ETF to that, which with thousands of stocks. And the MSCI Emerging Market Index already contains about 40% from China. So the second strongest economy worldwide is then well represented in your portfolio. And what you could do is you take about 60% of MSCI World into your equity portfolio and 40% of emerging markets. Then it will be weighted by GDP and not by market capitalization. And you will have a nice weight of returns coming from emerging markets. And China will be represented as the second biggest economy worldwide in your equity portfolio. So then you have 2 ETFs, you can track the global markets easily. If your risk profile is, or if you're a bit aware of the stock market risk, or if you're investing into a shorter term, like 5 years or 7 years, so not 20 years or something like that, you could add bonds to your ETF portfolio, for instance, government bonds or corporate bonds. For these bonds, I would actually recommend to have them in your own currency. But are there bond ETFs listed right now in zloty on your on Warsaw Stock Exchange? I'm not aware of that, to be honest.
Not yet.
If not, try to mitigate these currency risks. Maybe you can also choose just cash to make your portfolio more aware against and more robust against volatility on the equity markets.
We only have index funds in Polish zloty. Bond
Okay.
index funds.
Bond index funds. This could be a good choice too. And what you also could do is add gold to your portfolio to make it more robust. So like 10%, something like that. And then you would end up with just 5 ETFs. You can go even further, but this really depends on the brokerage costs. And if you're building a savings plan or if you're building a complete ETF portfolio for a larger sum you are planning to invest. And then you can split, for instance, the MSCI World and MSCI Emerging Markets into various regions, which make the total cost, ETF cost for your portfolio even cheaper. So you might end up with 7 ETFs. But there is no optimal size. And I always say the most important rule is less is more because of costs and complexity.
So
Does
you
this
say,
explain this a little bit?
yeah, thanks. So you say it always depends on ourselves, on our preferences, on our how much time do we have to do the analysis, and what experience do we have. So you say sometimes in some cases it can be just one ETF, it can be 3, 5, 7. So it
Correct.
all depends on how detailed structure of ETF portfolio we want to have. But let's say we decided how many ETFs we want to have in our portfolio. So now we open up the website with the list of ETFs, and we can see that in Europe there are about 2,500 ETFs. Okay, when we open up our brokerage account, we will see that the choice is smaller, like 100, 200, 300, 500 ETFs, but it's still a lot. So the question is how to choose best ETFs. Which features of ETFs should we compare?
Yeah, just as I mentioned, Just ETF is a portal for long-term investment, which we recommend to mitigate volatility in the equity markets and benefit from economic growth. So for classic buy and hold, and that determines how you look for the best ETFs. So first of all, find the right index and the right strategy. And here on the screen, you have a broad choice of possibilities. That is for Xetra listed equities, but you can also choose equities listed on other exchange places. Let me add London and Paris. Not so much Sixth Stock Exchange because they have their own fund rules. And here you see you have a lot of choice between equity markets, bond markets, and so on. You can invest into regional ETFs, which cover a whole region or even the world or a country. But as I said, for long-term investment, costs of the ETFs themselves play an important role.
So how to find the cheapest ETF? Many people say that the good indicator which ETF is the cheapest is tracking difference. Can we compare ETFs on your website with tracking difference?
No, we are not offering this. So this would be the difference of the ETF performance compared to the underlying index. But from a scientific point of view, it is very difficult to calculate that because which index point do you take? The index is published usually all throughout the day. The ETF is not traded all throughout the day. The underlying market of the ETF is not traded all throughout the day. So it's really complicated to measure it. A much better comparison is, and the best thing about ETFs is you have more than one ETF per index. So select a popular index and just compare the ETFs on that index. And that is much better than just comparing the tracking difference. And let's go to the MSCI World Index. That is always a good example. And you have already 19 different ETFs listed in Europe on the MSCI World Index, which is not that easy to track. I mean, 1,600 underlyings in 23 different countries. It's not easy to track that index, but look at costs that occur per year, and you can sort it easily on our website, and prices start from just 12 basis points per year. So my recommendation would be take a look at costs first. So select the index that fits best to your investment needs. Don't take an exotic index, just take a common index with more than one ETF listed, and then compare the ETFs on this index. Now we are looking at the ETFs on the MSCI World. A second criterion could be, because when you're investing in the long term, you don't want to see the ETF being closed halfway after 10 years or so. And my recommendation would be to look at funds that have been on the market for at least 3 years and that are bigger than 100 million. And you can see this in the filter criteria here on our website. And yet then you end up with still quite a big list of 12 ETFs, which are bigger than 100 million euros. So the ETF provider has no incentive to close this ETF because it compensates its fixed costs, and it's on the market since 3 years already. And the next would be to take a look at the tracking method, which should also fit to your personal purposes. And ETFs can track the index with the 1,600 underlyings. So someone buys the 1,600 underlyings and puts it into the ETF, or the ETF tracks the index synthetically. That really depends on your preferences. Synthetic ETFs usually track the index a bit closer and have some tax advantages, but on the other side, they have a little issuer risk against the investment bank providing the swap for the synthetic ETF. But you can also choose this. Let's say we want physical replication, or physical replication, maybe not of all stocks in the index, but of the majority. And then you have narrowed the list again. And you have a real good choice, and then you should take a look which ETFs are available on the exchanges you have access to. And that's part of the next question. I won't elaborate on that now. What you also could do is take a look at ETF performance. But looking at the 5-year performance, you will see some differences. But that is the next thing, also valid for comparing the tracking difference. You don't know the reason for this underperformance. Usually the reason for underperformance of ETFs is high cost. So when we are choosing a cheap one, I would automatically expect that the performance over the longer term must be better than of an ETF that costs quite a lot, like this one here with 50 basis points. From iShares, the biggest ETF provider in Europe, they offer an MSCI World ETF for 50 basis points, and others have them for 15 basis points or less. And this ETF, of course, has a performance which is less attractive over a longer term. So you can use this as a proxy if you like, but don't expect that this will happen in the future too, because when iShares lowers the fee for this ETF, it will automatically perform as good as the others. So make it more dependent where you can buy the ETF. And if you say, well, the best access I have is to, let's say, Xetra, so the trading venue of Deutsche Börse, then you have the choice between 7 ETFs, and taking the cheapest one will provide you with an ETF which has nearly 2 billion euro assets under management, plus.
This is exactly the question I wanted to ask you. Yeah. So which exchanges are the best to trade ETFs? Because ETFs are often listed on more than one exchanges.
Yeah, that's true. We have a different situation to the US. The US is one capital market, and this is where ETFs have started in '93, and they have just two different exchanges where ETFs are being traded, and that is on New York Stock Exchange and NASDAQ. And in Europe, we have about 40 exchanges, and many of them are offering ETF trading. But the most liquid venues are still Xetra from Deutsche Börse. It was introduced as the first trading venue, but it also still provides the best system for market making and has the lowest bid and ask spreads, and also a high number of listed ETFs. As you have seen in the beginning, more than 1,500 ETFs are listed on Xetra. That is the electronic trading system provided by Deutsche Börse. Very liquid trading. So this HSBC MSCI ETF, I would expect you can trade it at a bid-ask spread of less than 10 basis points. And that is really little, even up to order sizes of 100,000 euros. Then secondly, you have London Stock Exchange, also as an exchange, popular exchange venue in Europe. We just called it London here, and it's running on the SETS system, also with a kind of a same market model as Xetra. They have just copied it, and you will also find a lot of ETFs there. But London Stock Exchange is not dominating ETF trading in Europe. So Xetra is leading with a and LSE is also very liquid. And the third place is Euronext Paris, which is also quite a liquid market to trade ETFs. And on most markets, you will find the same ETFs. So this HSBC ETF, I bet it is listed on various markets. Let's take a look. So here you see a list, the listing venues. So it's being traded on London Stock Exchange in British pounds. It's traded on Borsa Italiana, at Euronext Paris, at London Stock Exchange in British pounds. This is 100th of British pounds, the GBX. And you can also trade it in US dollar on the LSE, just as you like. It's also listed on SIX, Swiss exchange. This is also a valid trading venue if you have access to it, but be aware the ETFs you'll find sometimes on SIX Swiss exchange are often not listed on other European exchanges because they have a different fund law in Switzerland. And the fund law in the European Union is harmonized and is a big advantage for ETF investors from EU member countries such as Poland. And of course, it's being traded on Xetra. So you have a broad choice, and it really depends on the commissions you have to pay at your broker, which trading place is more ideal for you.
And the idea which comes to my mind is what you actually have just said, that sometimes one ETF is listed on different exchanges, and on one exchange it's listed in euro, on other exchange it's in dollar. So it sometimes may depend on the currency which we have, because if we want to avoid currency exchange, we can choose this exchange which offers listing in the currency which we possess. What do you think?
If this really provides an advantage for you, okay, fine. No, if your brokers really charge you for exchanging currencies, if there is no such charge, there is no difference between the currencies. So it doesn't play any role if a fund is denominated in euro, US dollar, or renminbi. And same for exchange trading. Most of exchange trading on Xetra, for instance, is done in euro. And on SIX Swiss exchange and London Stock Exchange, you'll find multiple currencies for one product, but that doesn't play any role because it doesn't provide you with a currency hedge, and it doesn't provide you with a currency risk either. So if you're trading from 1 second to another, the exchange rate will be calculated, and the only exchange risk you have is through the underlyings in the ETF. So if the MSCI World provides you with 66% of exposure to US companies which of course have a dollar risk, then your dollar risk is 66%. But this is completely independent from any currency of the fund or the trading venue.
Okay. London and Citra in Frankfurt are also the most two popular exchanges available in the offer of Polish brokerage houses. But as far as I understood you would say you would prefer Citra.
Yeah, Citra is a little bit more liquid compared to London Stock Exchange. And it really depends on the commissions your broker is going to charge you for. One other remark maybe, there are lots of exchange-traded funds in the US. They are much bigger in size, and they are also traded heavily. And the US is the home country for ETFs. The biggest ETF and the oldest ETF is trading there on the S&P 500, and it has more than 300 billion US dollars assets under management right now. How about buying them in the US because it's the home market? Well, at least for investors in Germany and also many other investors in other European countries, this provides huge disadvantages from a tax point of view. Plus, you don't have the feature of European fund legislation you can rely on as a EU investor from a European Union member country. Plus, you sometimes have problems with exotic products in transferring, for instance, dividends and get extra charges from brokers. So my recommendation would always be don't invest into ETFs that are traded on US exchanges. Stay in Europe. The selection of ETFs and the range of ETFs offered in Europe is quite big, and liquidity is sometimes even higher in European stock markets than in the US.
ETFs are listed on different exchanges, but they are also registered in different countries. Most of ETFs are registered in Luxembourg and Ireland. Do you have any ideas about which are better, which to choose, which to prefer?
I would say as long as you go for an ETF domiciled in a European Union member country, you will have no difference. It could occur for some ETFs that they might have local tax disadvantages, but I have no clue how the situation is in Poland. There is only one little advantage I might reveal to you, and that is valid for all European investors, and that is for ETFs that physically track an index, like ETFs from that list, that are domiciled in Ireland, because they get a rebate on taxes in the US. So the US has quite high withholding taxes on dividends of 30%, and all European ETFs have to pay these 30%. So they just get the remaining 70% of dividends on US equities, except for ETFs domiciled in Ireland. And ETF providers have reacted to that, and most ETFs that physically track indices with a high proportion of US equities are now domiciled in Ireland. And let's take a look at this list, if this is the case. So we have these 7 MSCI World ETFs, and as I mentioned, the MSCI World currently has 66% market capitalization from the US, and it has a dividend yield between 2 and 3%. So it really will hurt us if we are charged a withholding tax of 30% instead of just 15%. And let's take a look. We select columns and we select the fund domicile. And here you'll see you have the fund domicile Ireland for most of the ETFs. And this ETF in Luxembourg will have a tax disadvantage.
Okay,
so it performs
yep.
less well than the others.
Okay, so let's try to summarize all these details which you mentioned. So if I had to choose between the Irish and Luxembourg domiciled ETFs, because of tax reasons, you say we should rather take the Irish ones. We should look at costs. We should look at the size of the ETF and prefer
Correct.
the biggest ones. Um, we should also prefer exchanges where the liquidity is the highest because there are low spreads. So you said the Citra is actually, in your opinion, the most liquid. Also, London Stock Exchange is one which we can consider in
Absolutely.
the first way. So let's say we have chosen our ETFs to a portfolio. Uh, what next? How to monitor the ETF portfolio? What to do with the asset classes? Should we just watch them and do nothing until our retirement, or what to do?
So doing nothing is already quite a good idea. And be relaxed, even if the stock market goes down. And if you have bonds in your portfolio, it will make your portfolio less volatile, or you can even mitigate equity risk by long-term holding. But it is a good idea to monitor the portfolio. And I have prepared one to you. This portfolio has been started with the oldest ETFs I could find for various asset classes in 2007. So it's about 13 years old now. So we have simulated the investment of 100,000 euro in the diversified ETF portfolio in 2007. And we see what has gotten out of that today. So what we are doing at Just ETF, we are providing you with our tool quite a detailed overview on your about your ETF portfolio. And here you see the asset classes. Red is always equity in our system, blue is bonds, yellow is precious metals, and light blue is cash. Cash shouldn't exist in your ETF portfolio at all, because then you're not invested, except if you take it to make your portfolio more robust as a as just like bonds. And here you see the proportion of the different asset classes in your portfolio, and they are not constant. So you are starting with a strategic asset allocation. You say, let's say equity 50%. This is just an example here. Equity 50% divided into emerging markets and developed markets. You're starting with a constant proportion of gold of 10% to make your portfolio more robust, just an idea, and 2 trackers on bonds, on European bonds or bonds denominated in euros to mitigate currency risk if you're an investor from the Europe area, and it's divided into corporate bonds and government bonds. And that is the strategic allocation you're starting with. And now, 13 years later, you see the portfolio is quite unbalanced. And why is this? First of all, the asset classes perform differently over the years. So they gain in value or lose in value. And you can clearly see this here. Equity has lost 5% in the weighting of your total portfolio. And you have some cash, which is from dividends paid by the ETFs in your portfolio. So there are lots of ETFs that distribute dividends they have collected, and others reinvest the dividends. So that's also a difference you have to make out early, maybe, but that depends on your personal situation. And gold. You have seen the performance of gold in the watch list I have been showing you before. Gold is now nearly 15% in your portfolio. And so this is completely different to what you have been starting in 13 years ago. So what you could do now is so-called rebalancing. And that is the only thing you should do with your portfolio. So take a look at the asset classes in your portfolio, and if there have been major developments on the stock market or in other markets, just like gold, you have to rebalance the portfolio and bring it back to its original strategic asset allocation, which once was really fitting to your needs. And this portfolio here has been running by a very lazy person. So this lazy person has done nothing about for 13 years. And what I can show to you now at Just ETF, we have a function of to rebalance the portfolio automatically. And it even calculates with the click of just one button which orders you have to execute at your local broker. So to get back to your original weighting, several orders have to be done. And here you see a clear order list with the number of shares and the total amount. And that is quite significant, as you can see here. It can be also a good idea to take a look at this once a year and then decide, is it really that drastic? Do I have to rebalance my portfolio? And this is a nice tool to provide you with the functionality so you don't have to calculate this all on your own. It depends on current share prices of ETFs, so it makes everything much easier. And it even collects the fees of the online broker. You can calculate how much this rebalancing will cost. And in our case, this will be 87 euros of broker commissions. So you have to keep that in mind. Don't do rebalancing too often because you don't want to pay these 90 euros too often. If you have a broker account with low commissions, you can do this more often.
What is the best method of rebalancing and which method is implemented in your system?
So we have a method where we adjust the portfolio by selling and buying ETFs. And you can decide on your own when to do it. Or we have also alarms built in. So when a certain asset class hits a limit, you get an email with an alert, and then you can decide, I do the rebalancing now or later. But from a methodology point of view, you can also add money to your portfolio. So let's say you have 80,000 euros left on your bank account. You can recalculate it, and then you end up only with buying transactions of this size.
Okay, so you're not using this method which says we do the rebalancing once a month, once a quarter, or like once a year, but you just do it irregularly depending on prices of assets. When the asset hits the limit, then you get the alert that you need to do a rebalancing. Am I right?
You can actually do both. And there's no automatic yearly rebalancing built in Just ETF, but I would just recommend it. And if you have less ETFs, for instance, or a different portfolio structure, the need for rebalancing might be lower or higher. I don't know. So there's no common rule. My recommendation just would be take a look at it once a year and make your adjustments. If you just have to sell one share or two shares, don't do it. Just leave it as it is. And make it as easy as possible to readjust your original strategic asset allocation.
We're getting to the end of our show. And I would like to ask you, because as I said before, we have 2,500 ETFs in Europe, which are available for us. 7 of them are listed on Warsaw Stock Exchange. I hope this number will grow in the future, but at the moment there are just 7 ETFs. Is it possible? Is it possible to monitor these ETFs on Just ETF? Can we include them in the portfolio and track them on Just ETF?
Honestly, I'm a bit ashamed that we haven't listed the ETFs on Warsaw Stock Exchange yet. This is due to our data vendor which is not able to cover Poland so far. So we don't have any ETFs listed in Eastern European countries in Just ETF yet. But maybe one day.
What it depends on? Is it your initiative which is needed to make them show up on your website, or the owners of ETFs which are listed on Warsaw Stock Exchange should get to you and ask about this option? Which way should it go?
No, we are using various sources of data to maintain our Just ETF website. And first of all, we have the base data for the ETFs, which we could also add ourselves. That would be the easiest part. Second is you have to have a feed of daily ETF prices. So we are using daily ETF prices provided by the ETF providers, but in a consolidated feed from one data vendor. So this vendor would have to include the ETFs listed on Warsaw Stock Exchange. This is the second thing. And third, if you look at a single ETF profile, we are offering exchange prices, but only for Xetra and London Stock Exchange so far. And these exchange prices come from a different data source. So all these data sources would have to be in total available for one market to include it on Just ETF. And we can work on this to consolidate it. And then also we have to have the information which ETF is registered for public distribution in Poland. And that is also an information we are getting from our vendor. And unfortunately, Poland is not monitored by this data vendor. So he would have to include Polish ETFs or ETFs listed on Warsaw Stock Exchange, and also maybe ETFs which are available for public distribution in Poland first before we can include them. Yeah, I'm really sorry for that.
Okay, we are now heading to the end. What can we say in the very end to our audience, to our viewers, how to start? Open up the account in my brokerage house and then get to Just ETF or different direction. What can you say to the beginners how to start investing in ETFs?
So my recommendation, first of all, is don't be anxious. Just do it. Invest the money you have, or run a savings plan. Second is open up a broker account. Look for a broker account with low commissions and lots of offerings for ETF trading and exchanges you can trade ETFs on. Third would be to have an idea about your investment strategy. Don't be too exotic. Just keep it simple. Little number of ETFs, and then buy them at low broker commissions and low bid-ask spreads. Take ETFs that will persist for quite a long time, so which are big enough already. Don't speculate, just hold them as long as you can and mitigate equity market risk through that. Yeah, and finally, I bet you will end up with quite a nice annual return for your ETF portfolio. Maybe also spend some thoughts on your personal risk profile. If you can't invest for such a long term, think about adding bonds or a cash component to your portfolio. Or if you're just anxious about volatility on equity markets, you can also add bonds to it. Maybe some gold to make it more robust against big stock market crisis. And then you will be well off with a portfolio of 4 to 5 ETFs. And don't be anxious when the market goes down. Just hold your ETFs, maybe even buy another portion of equity ETFs when the stock market is down. Be cool.
Jan, thank you very much. It was a great pleasure to host you. Thanks everyone for watching us. I hope you enjoyed it, and I hope we'll see each other next Friday. Thank you very much, everybody.